Hi guys, welcome to today's recap for January 29th, 2021. I hope you guys are doing well. It was an exciting week in the market, no short of drama. And I wanted to spend some time in this video just to kind of go over some of the stocks that we cover on our Sunday stock update, which this week was for Apple, Tesla, Palantir, and GameStop. And so what we usually do in these videos, we'll just briefly talk about the price action for the day, maybe some news that came out with regards to the stock, and then we talk about just some general tips on trading. And for today, I'd like to really talk about, we do have earnings season, and one of the things that this market is telling us is that longs are winning the long game, and shorts are essentially getting squeezed. And so one of the things that I continue to see either pro traders or sort of new traders do is they're still trying to fight the market. And don't get me wrong, they're still shorting opportunities, but those opportunities are a lot less, and shorts are at least thinking twice about shorting a stock even when it's overextended 100, 200, 300, 400%. We saw a stock that gapped almost, I believe it was like 300% SIEB on Friday, and that actually failed, although it did halt on the upside after open, and then it halted on the way down, and then it held some key levels for quite a while, trying to get people stuck. And it was a micro cap, it was short, it was a small cap stock, and it was like $4 on Thursday, and it got squeezed all the way up to almost $30 on Friday. And because the float is so small, it's so easy to manipulate these stocks. So the first kind of step or tip that I want to give today is just being careful if you are going to short a stock, to at least have just a risk management plan in place. And is it a 1-to-1 ratio or 1-to-2 ratio? Just think of it in terms like that. If I can make $1, am I willing to risk $1? And if the trade doesn't work, just cut it and forget it and move on. Try not to think twice about the trade itself. A lot of times what happens is we get into our heads, into our minds, we're telling ourselves it's going to work, it's going to work. Always remember, if you're a day trader, you can always get back in the trade. So when you start to see the stock not go do this and just ram you over, but start to fail, and you can always add to your position. You can add as the stock fails. But the one shorts out there who have the strategy of trying to find the top, or looking for the top, or basically not getting validation that the top has been put in, they're getting essentially squeezed out. And that's why we continue to see these momentum plays. We even saw it on PLTR. I believe it was on Wednesday, where we hit a top of 45. So there's a lot of these squeeze plays that are in play. So if you're in the long game, this probably doesn't really affect you. But if you're in the short game, understand that shorting right now is a little dangerous. We obviously know what's going on with the market in general. So the second tip I like to give today, because we're in earnings season, of course, is managing your size. I know a lot of people, for example, on Tesla, AMD, Apple, they're holding full size going into earnings, not recognizing that Tesla and Apple are trading at all-time highs. And when you have a stock that's trading at all-time highs, we talked about it on Sunday, is last Sunday's videos, how much of that price already factors in solid earnings. So for example, if you're trading Apple and it's at all-time earnings and it already has an all-time high, like, where else can the stock go, right? People are going to want to take profits. And same thing for Tesla. We saw the stock go all the way down to 800. I mentioned that I was buying at 800 and riding it right back up. And so when you're trading at all-time highs, I'm not saying that you should sell your position, but there's nothing wrong with capturing some profit. That could mean a quarter of a position, that can mean half a position, but it sucks to see all these traders who've worked so hard make so much money. And like, for example, Tesla, I mentioned a few days ago that I saw it going back into the 700s. That's a 15% reduction from the all-time highs of 900, right? Now we're starting to look at a 15% reduction. So what's wrong with selling at a massive profit and then just rebuying, right? So if you're committed long to a certain stock, wait for those dip buys. And dip buys aren't 1-2% dip buys. We're talking about major dip buys, like 15-20% plus, that you can buy, but you've locked in the profit when you knew it was running strong, when it ran all the way to all-time highs. And then you can lock in your profit, and like I said, it doesn't have to be the full position, it could be a quarter position, and then you can rebuy. So same thing for Apple. We said a few days ago before earnings is that I could see this thing in the video in the low 130s and the high 120s. And what did we see yesterday? We saw 130. And so I just would love to see that people are locking in profit, reinvesting that money back into the stock on these dip buy opportunities, and that way you're paying yourself. I mean, how often do we ever talk about that? Why are you in this game in the first place? Is this like a side hustle? Is this something that you're trying to make a career, a living off of? Is this income that you need? Don't forget to pay yourself. Reward yourself. There's nothing wrong with taking money out of the market and paying yourself and seeing the work that you put in every day, whether you're watching this video, whether you're waking up at 5 o'clock, whether you're, staying up late, watching, reading up on a company. You need to pay yourself and reward yourself for all the hard work that you've put into your business. So with that said, guys, let's jump in. We will have new stocks that we're going to cover, and we'll talk about that on Sunday night. And so Apple, we had the earnings here, and we could see that the stock, you could tell from these candles, these long wicks, that we were starting to have some type of, not necessarily bearish sentiment, but it definitely found a top, right? And that top was around, I believe, 145. Is right here, about 145. And so we had this sort of triple top, and then we had the earnings come out, and then we just had this massive sell-off, and overall market weakness, which makes sense if you're trading at all-time highs. Pullbacks, like we've talked about in the past, are healthy. And so one of the things we talked about was this key level here, which was the low 130s, and then we talked about what we identified in this sort of solid green line, this thicker line, that ideally the best buy would be about 120, 127. And then you can also see that the 50-day average is coming up, and it's intersecting this 127. So I wouldn't be surprised if we saw some continued weakness and if we started bouncing off the 50, and even if we potentially could even trade under the 50 like we did back here post-election. Okay, so my risk at this point really would be the 127, but just don't be surprised, like I said, if Apple continues to sort of bearish sentiment. And what does this mean? It basically means, hey, there's people selling the stock, capturing that profit, right, selling it off. We got bigger volume, and then what you can do? You can dip buy here, right? So you lock in your profit up here pre-earnings. Don't wait for the earnings to come out, because that's when the stock tends to move, right? And then what you want to do is you can take out that quarter position, and guess what? You can rebuy it here, but you just paid yourself. Okay, so with Apple, that's what I'm looking for. And what was I doing yesterday? Same thing that I always preach on this channel, just buying calls on these massive dips, right? When we know that the fast moving average is up here, we know that Apple's trading way down here. We also know that the RSI on the 15-minute, the 1-minute, the 5-minute is way oversold, right? These present buying opportunities. So we're buying Apple calls, whatever strike price you want. It could be in the money, it could be out of the money. And I usually try to do them 2 months out. And then as we sort of recover, as we make these recoveries, these green candles up here, right, you can just sell them. And these moves are typically 20, 30 cents, right? So if you buy something, for example, for $300, you can sell them for 350 bucks or 330, excuse me, up here. And then this was even a greater flush. I was expecting a test at the 20-day, which we got, but we ended up just flushing even more and more. Okay, so we really had, I think they said it was the worst week since October in the stock market. And so again, we knew it's going to come back. It touched, of course, our fast moving average, and then we even had a bigger bounce. So I ended up just buying and selling calls. I think I did 3 rounds of buying and selling calls yesterday, and that was a solid play, all green for Apple. And again, a lot of people unfortunately are going to look at the long position and say, I lost money in Apple, right? So that's why we need to adjust our strategy, or we can add to our arsenal on how we trade. And for Tesla, Tesla was down 5%. So again, people who bought, let's say at all-time highs at 900, and you're down, almost a little over $100, you're down 15%. And so, as I mentioned a few days ago, we had some support levels that we were looking at, and we had a soft support here, which we talk about when, which I identify as a thinner line, is a dip buy opportunity earlier in the week, because we had several bounces here at the 820 level. And then all of a sudden we have this massive, you can see these candles, right? So the bigger these candles, the more, right, selling pressure in the volume. You can see there's this massive selling pressure, and then you can see the people, the shorts, whoever bought it back up on this dip buy, and you can see that it was identified by this long wick that this was a strong rejection of that price. And you can see this line we identified as a thicker green line is a stronger support, was around 775, and yesterday I believe the low was 780 right down here. So we were about $5 from what I would consider a very strong support. So of course, what did I do? I was literally sitting on my hands waiting for this flush here, right around here. So what happens is they trap you, right? So you feel like, okay, I'm dip buying. You can look at the volume, it's still relatively low, and you buy, and then it sells off again, and you're like, oh, and then you try again. And so I'm literally sitting here. My first order was right here at 795, and I'm waiting for this massive dump. And look at that candle. So look at what happened here, where the people think it's being dumped, and then look what I'm waiting for, this massive dump. And I'm not over exaggerating. It flushed, and I was up literally 4 points in a matter of like seconds. It literally tanked, and I saw that I had gotten filled, and I was already up 4 points. However, I didn't sell, and I wasn't quick enough. And usually, if I'm up, 4 points on Tesla, that's pretty good for me. And we ended up getting another flush, which was awesome, because this was even the ultimate buying opportunity, right? So we had another flush. We continued this sort of downward momentum, added a little bit to the position, and then you can see there's just a constant retesting. You can see these candles are extremely long. You can see the volumes picked up, and then what do you see? You see a complete engulfing candle on the green side. And now we know that the buyers are stepping in. And so of course I sold right back up here to back to 800. And then we sort of went back and forth, and then we had a second opportunity that came up. I believe it was right here, and we validated that level. And I was trying to see if we would break down again and possibly hit the 775, but looks like we held well, and we kind of stepped back in and moved. So do I continue to see weakness in Tesla stock? Yes, I do. My risk would be, again, probably here to the 50, which as it sort of comes up, I can see, again, the low 700s. I think the ultimate buy for me, if I were to go super heavy on Tesla, would be 695, 700. And like I said, there's nothing wrong with that. We also talked about that earlier this week, which is these pullbacks are how you get new buyers in. If I'm not a buyer of Tesla at $900, I'm going to be a buyer at 750, at 700. So these pullbacks are going to flush sellers out, flush people who held through earnings, waiting for us to get to 1,000. And now as it sells off and we get new buyers in and new money in, we can get sort of a next leg up. So keep in mind that Tesla, from the news of the S&P, is traded on the bullish side of the Bollinger Band, which is this dotted line here, which is a 20-day average in this upper band. And you can see now, look what happened. We actually traded below the 20-day, and you can see that we're starting to form another channel, right? And we're going to flatten out. So now what I identified here as a consolidation range, which ended up still being an uptrend, now looks like we may start doing a channel trade potentially between $700 to $800. So that's what we're going to look for as we continue to trade Tesla. But like I said, if you've, same thing for Apple, if you've held Tesla from $400 or even, before pre-split, you've made a ton of money. Nothing wrong with selling 5%, whatever position, just pay yourself, because you always want to leverage and understand that there's world events that do affect the market, and you just never want to know that 1 year, 2 years, 5 years of hard work just goes out the gutter just because you didn't choose to pay yourself. And again, if you're comfortable with holding a full size, like I said, for me, there's nothing wrong with cashing out and just rebuying on these dips. And for me, a good dip is right 15%, 20%. That's where you could start to go heavy if you really believe long term in the company. Which, for Tesla, like we said, this is going to be a $1,000 company sometime this year. No question about that. So with that said, guys, let's jump into Palantir. And Palantir is, the same sort of stories. This is part of the short squeezes that we saw. You can see these massive, we know Palantir if we look at the ATR here, typically a $2 spread every day, and now it's jumped up to $4. And so the volatility of the stock has been massive. We've seen a lot of volume in the stock. And so for me personally, we identified this line here, the ultimate, go heavy zone of 2750. And then we identified 2950, which I believe we got bounced right back here on, this was Monday, for a good dip buy opportunity. So my go heavy price is still 2750. And the key level here for Palantir is going to be this 32. It seems like we've been holding that level very well. I identified it this day on Monday because of the gap fill that we had, that opportunity that came in the flash crash that we talked about. And so, this 32 levels held really well. So that would be the first level I would look for it to break. And if it breaks 32, then definitely 29.50. Again, the reason why it's a thinner green line is I call it sort of a dab, not a full-size position. And then I do a full-size position at 27.50. Do I see 27.50? It would line up perfectly with our 50-day, which would be a great opportunity. We haven't had a bounce yet on the 50-day, and most stocks do want to bounce off their 50-day. So yeah, it could be, but if it does prolong, then I can see it potentially coming up and hitting up in the 29.50 range. So, with that said, guys, this stock has had a massive run. It's holding up the 30-ish level pretty well, and we're going to continue to see contracts and other things come up. And I honestly expect, similar to Apple, that we'll get some kind of consolidation. We'll probably see more upwards momentum. Guess what, guys? We have earnings coming up, right? So that's where, again, when we're going to trade, let's just say, $45, $50, that's where you're going to need to sell or sell part of your position to lock in, because I can guarantee you will see a pullback on a stock that essentially has doubled in the last 30 days. And so when that happens, again, we're going to have the profit takers. We'll see how the 50-day trades. But also, one of the things that we've highlighted in the previous videos is you have that lockout period expiring. And so that's really important to understand, because you're going to have a ton of more sellers and more shares on the market. So when that happens in February, just like Snow and some of these other recent IPOs, when that happens, Uber, you can go back to Uber, all the stocks, they always tank. They always tank. And that's because, again, you have more shares. That's why offerings are always tank stocks, right? When you have more shares, more sellers on the market, then there's essentially the value of the stock goes down, and it gets beaten down because people are like, finally, I can sell, right? I bought this stock pre-IPO, $5, $8. Now I can sell it for 50. So just keep that in mind if you're risk managing your position. One of my best plays this year is, it's been Palantir, and it's been awesome. It's a fun stock. I have the last couple days personally stayed out of it. I've been just so busy with all AMC and the million other tickers that are just trading, and we'll definitely go through that. We'll probably add some symbols on Sunday's video. Final, GameStop identified what we saw was sort of a. What's funny is what seems like a flat consolidation day is really still a big spread, right? So when you still have a high of a 414 and a low of 250, and you have almost a $180 spread, still sounds like a pretty day. And I know a lot of pro traders that are making a lot of money. I heard someone make $1 million on this initial open with shorting the position. They actually shorted the position right here. So what you had was a weak open. We know that the stock got beat down here at 193. And then you can see that there was this sort of up gap. So there was just a lot of ways to make money. Personally, myself, I've been selling puts. That's been my play. And I believe the last day, I believe it was Thursday. I believe it was Thursday. I actually closed my position. It's been my biggest play probably of the month. And I didn't trade GameStop personally yesterday. But you can see, if we're looking at key levels this week, right, that we've had several bounces and supports off this 190 level. Down here at one point we got, really, this was the day that all the platforms screwed over their users. And that was, 117. I mean, that was a crazy buy. To buy something, let's just say, even if you got in at 120 and to be able to sell it at like $400, like, this is gambling. I mean, let's just be honest. That's probably why I haven't traded it. And so I don't do gamble plays. I know there's a ton of opportunities in, but these are the types of plays that can make or break you. And I personally have worked really hard building up my account. And I'm sure you have too. And if this is, something you're into, that's great. But it's not, I don't really consider it trading because there's just so much manipulation. And when there's so much manipulation, and don't get me wrong, overall the market is manipulated. But, like this type of play, right, where people are frantically losing from $400, $500 down to 117. I mean, that would make anybody panic. So this type of manipulation, it just isn't something personally for me. Nothing wrong with trading it. Just like I said, I sell puts that are like way down here that I know are levels that I'm comfortable with owning GameStop, but I don't want to buy a $400 stock that's, that's being manipulated the way it is. But definitely a win for us this week as a retail trader. So, definitely the 190 level has been the ideal. How long does this continue and where does it go? Does it get rotated to a different stock like we saw with BlackBerry and AMC and some of the other names? I don't know. But the spread's so big, it's hard to identify the level. So the key resistance level, again, if you're a seller, is going to be the $500 level, which is right up where we traded pre-market on Thursday. And then the key support level is 190, which is, again, that's like a $300 spread. So, you can see that right off the open, we tend to gap up and then we tend to sell off. So just keep that in mind. If you gap up, expect some type of sell off to close the gap from the previous day. And so if you see that GameStop's trading much higher, just be cautious that that could be sort of your risk, is the gap between the pre-market high and the where we closed the previous day. Again, guys, I appreciate you for watching this video. Hopefully, some of these tips and tools help you with your trading. If it does, it really helps me understand sort of what's useful for you. If you post a comment, definitely a like's always appreciated on the channel. And so if you have any questions or comments, definitely post them below. And if there's something that I can help you out with, post it below. We're a 100% free content channel. We don't sell you any subscriptions, any programs, any chat rooms. So anything you need help with, I'm happy to help you out with. And as always, guys, I do have an exciting guest interview video for some of you guys looking for a side hustle. I have a interview with someone who's launched a successful halal food truck business, and that's coming out most likely next week. And so definitely look forward to that on the channel. And with that said, guys, I'll see you guys on the Sunday night update video, and I'll talk to you guys later. Bye-bye.